All right, guys, it's Paul Singh, the Market Speculator, with the trade report for January 31st, 2019. Recording this in the evening on Wednesday. So we're heading into the final day of the month. Before we get to the market, what we're looking at, pretty exciting day and a lot of stuff setting up now. Next group mentorship session is on Monday at 8:30 Pacific time, which will be 11:30 Eastern. So if you can attend, make sure to attend. And then remember, if you can't attend, I think it's really helpful to watch these things. I try to mentor you guys live with the question and answer, but if you can't, I'm sure someone has, if not this mentorship session, in the past one, has answered some questions that you have. Plus, I always do one lesson to start to kind of build up your education. So I'm just going to, some of you surprisingly don't know you can do this, but if you log into the site, you go to swing alerts at the top of the page. I'm going to start reviewing this time to time just to make sure everyone knows. You have the current report up here, and then you have a few of the past reports on the side here, and you have recent notifications. So recent alerts. So right now we have alerts going back to the 8th that you can go back and look at. I sent out the link here to join for Monday, and remember you can go into the reports as well. In every report, there's the current video, the mentorship videos from the past, and then I'll often link to something else as well. But if you go to this mentorship site here and you're logged in, you have the last mentorship recording plus all of the past recordings. So you can watch all of these things, and they're all about an hour in each. So there's about 11 or 12 hours worth right now. I think there've been 11, so 11 hours worth right now. And remember, a lot of education in there, plus questions and answers. So definitely review those on your own time whenever you get a chance. And then obviously when we do Mondays, that one will be uploaded onto this as well. All right, let's get to it now. SPY, fantastic day. We talked about this consolidation. Our bias has been to the upside. That's why we were already in 3 positions to the long side, and why we've been exclusively going long in 2019, even though leading up to 2019, from October to December, we were 70 or 80% short, which worked out well. So, but things have changed. Remember, we talked about market breadth or market internals have really improved. Still don't know if we're out of the bear market, but as this bounce happens, we're not just playing small bounces. We continue to look to add. So I added today. That was Netflix. I'll go over that trade in a second. And I may even add tomorrow because now the market has consolidated and I feel like we can make this next run here. And also earnings have been good. So we're going to go over that in a second, but I really like the way earnings season is starting to play out. It started off good with the banks. That's why we're in financials right now. And it's with a few blips here and there, it's been a pretty good earnings season, which is really what we needed in this bear market. And I think that's part of the reason we're continuing here. Rather than pulling back harder. So everything we wanted to see, we have been seeing, and now we're getting this break. I think this might be the catalyst now to get us to the 200-day moving average. This is going to be a crucial test here. So if we do get up here, if we can break this, then it's going to be we should see a really nice run to the highs, and then hopefully we get back on a bullish trend. But we're making no predictions. Remember, always have the alternative ready. And I think too many people just get locked into what they want to see or what their analysis is right now. But we can end up being wrong, or the market can change. And then we have to be able to flip very quickly. So we're ready to short if we have to. But in the meantime, we're pretty much going exclusively long right now. So that's SPY. And then the Qs did very well because of Apple, basically. Apple had great earnings. We wanted to see that, and we got that. And then IWM was up around 1%. I'm not thrilled about that. Remember, we want small caps to be leading, and they had been leading through here, and now they're kind of dying out a little bit. And even when I was making my focus list today, I like to have a good mix of bigger stocks and small caps and everything in between, and it's leaning towards the bigger stocks, which I'd like to see small caps improve a little. But maybe I'm nitpicking here and trying to find something, but I would like to see small caps do a little better than 1% on a day that the Qs were up 2.5% and SPY was up what was it, 1.3 or 1.1 and over 1.5%. So that would be my one nitpick for today. But Netflix here, this was our entry. We've been watching Netflix. I love to get into stocks that have a poor earnings reaction, but then reverse very quickly. And that's what happened to Netflix. So the earnings reaction was not great after being a leading FANG stock here through this big run. A little bit of a blip with the earnings reaction, and earnings weren't really that bad, but we tend to be overcautious or get panic real quick. But then it reversed very quickly, and now we comfortably got over the 200-day moving average, and that was my cue to get in. We talked about this before. I was waiting for that. We got that, and we entered today. So now we are in Netflix. Stop is under the range here. And then target, initially, we're going to go to the top of this range at about 358, which is where it was before earnings. And maybe it could even fly higher and we could get a huge win out of this. We'll see. We'll reassess as we get to this level to see if we want to play for a break or just take our profit there. Or a really good strategy would be just take your profit here. And then if it does break, we can always get back in. So that's Netflix. FAS. Nice, 57.75. We entered at 55, so we're up 2.5 points, or I think 2.5 points already. Our initial target is around 60, so we're a little more than halfway there. So one nice push, and we're at our target on FAS. UWT is doing what we wanted to do. We entered at 13. We're up over 14. We wanted to get up to 16 to enter, and then finally BBBY. Now I know a lot of you got stopped out. I stayed in because I'm watching the market very closely, and I had the sense that this was stop gunning. This is a logical place for people to be placing stops, and oftentimes what happens, and you see that happen here, this tail is just textbook stop gunning, where they take the stops out and then it just comes back very quickly. So I held through this. You did not get an alert. So if you're sticking with what I was doing, you would still be in the trade. Now, some of you have to put in hard stops because you're working and can't be watching the market. That's fine. There's a kind of a give and take, and advantages and disadvantages to either. If you have the hard stop in, it really protects you if it continues to slide and you get out. And maybe you're a little frustrated on days like this, but at least it's protecting you. Now, what I did today could kind of bite me, and it has in the past. You guys have seen when it has, where I feel like it's stop gunning or something, but then it just continues to keep sliding, and then I would have taken a bigger loss. So if you're a little frustrated about today, remember there are going to be times where having the hard stop in saves you, and I'm the one who gets a little crushed. So there are advantages and disadvantages, and you've got to pick kind of your poison and which style you want to do. So hard stops, loose stops, waiting to see. There's nothing wrong with either. Those of you who got stopped out, there's nothing wrong with being stopped out today. And you can always get back in. So if you want to get back in here, you can. So those are our positions: BBY, UWT, FAS, Netflix. I still like all of them, and I like what the market is doing. Let's look at a few areas here. Brazil is breaking out. A little frustrated because I talk about Brazil every day and I'm not in it. We took the trade earlier in the year, but I got out of it now, and I was a little concerned, obviously, about this gap down here. But it's breaking out now, and I think you could maybe even enter here on the breakout because there still is a lot of room to the upside. We have a range here at about 47, which maybe isn't that high. But definitely could look at Brazil, or you could even break it down and just start investigating some Brazil stocks as well. Someone actually sent this to me today. They really like PBR, and PBR was not on my radar, and I really like this one because it's in two areas that we really like. We like energy and oil right now. It's been so beaten down, and it looks like it's bottoming, and it's Brazil. So it's like you got the best of both, two really strong sectors here. That wasn't even in my focus list. It just came to my head because someone had emailed me, and I really do like PBR here. But okay, Brazil, semiconductors, still showing strength. It's had a fantastic earnings season, and then I think semiconductors are going to pop tomorrow because AMD is looking really strong. So one of the big semiconductors, the only semiconductor that has really not done too well is Intel, but Intel is coming back over its gap down, and I'm going to watch this closely, even though I don't trade Intel that much because it's not that volatile. But this is another one where overreaction to earnings and then starts to pop, and I really like what that happens. The other one that's not doing that great is NVIDIA, although because this was a warning of earnings. They do this a lot when companies know that they're going to have bad earnings. Sometimes they try to get in front of it and warn. And that's what happened here, but it is holding that gap down. So even the ones that have done bad in semiconductors are not continuing down. They're having that bad move, but then they're holding that level, which is good. And then you guys know from what we talked about before, we have a bunch of semiconductors in our earnings breakouts, like LRCX, XLNX. They're all too extended to enter right now. And then we're adding AMD to the breakout list today. So those are on our semiconductors is on our watch. Energy, we're in oil already, but the ETF here, the 3 times leveraged ETF, ERX looks pretty strong, and I think it could hit 20 top of the range here at 25. So talk about risk reward. Maybe you risk about 1.5 points, and you could gain 5. So that would be 3.5, 4 times your risk, maybe 3.5 times, which is pretty good. And of course, we have stocks, but you have to check the earnings dates like RIG, DO that we're watching. And then China is starting to pop, and BABA did really well today. So look at the China ETF, 3 times leverage. If you're looking for something to trade, I think that one's good. We've got some new stocks added to the earnings list. So here's my earnings breakouts list right now. I added AMD to it today. I added ANTM to it today. Look at that beautiful breakout. RCL, really nice breakout. This is in leisure. Apple, of course, let's stop and talk about Apple because I may enter this tomorrow. We talked about this in the morning, that Apple was breaking out. Remember, I think the report was sent about 20 or 30 minutes after the open. And at that point, Apple was gapping. And we talked about potentially entering if it crossed the 50-day moving average, which it did today. But I'm going to wait another day. So if tomorrow we see it hold this 50-day moving average, I may look to enter. We're going to get really nice risk reward. Let's say we risk about 4 points here, top of the range, or let's say just 200. A move to the 200-day moving average would get us to about 190. So essentially, we're risking 4 or 5 points to gain 25 points. So we're looking at 5 to 1 on our risk, meaning on a trades like this, we could be right 30% of the time and still be crushing it when you add up, say you do this 20 times. So Apple, really good. BABA broke out today. A lot of nice breakouts today, which is part of why the market was so strong. Boeing, military defense, very strong. And what I want to see with Boeing is, here's the top of the range. And I think this might be an all-time high. Yeah, this is the all-time high. So what I want to see here, I would like to see some consolidation and then see it break 392. That would give us a really nice entry there. I think those are all the earnings breakouts that I added to the list today. And I'm behind on Monday and Tuesday, so I've got to add a few to this list. They're in my journal, but I haven't added them into TC2000 yet. Let's go to the rest of the focus list. Goldman Sachs. We're already in financials, but it looks ready to break out at about 203 and make a run to about 215. Probably not going to trade it. FCX, this had a poor earnings reaction. So you're seeing a theme. What I liked, how I trade these poor earnings reactions, I like to see if they bounce back. FCX is doing that, and we know metals are doing pretty good. So I may consider FCX here for a trade. We talked about Brazil, BRZU. BABA, we already talked about. Twilio doesn't report till the 12th, so we have some time. I think it could make a little run here before earnings, so I'm considering Twilio. And then Facebook, after hours, very strong earnings reaction. Much like Apple, looks like it's going to test its major moving average. So we're going to watch tomorrow. If it closes above the 200-day moving average, I just might consider it for a possible entry. And that's about it for tomorrow. So well, let me pull up Under Armour too. I still like Under Armour, although I do have to look up earnings for that one. So a lot to like here, a lot of good stocks. Market is looking very strong going into the end of the week. It has been a fantastic January. Hopefully the market can continue that going into February. And remember, guys, try to make time on Monday for the mentorship session. And if you can't, watch the old videos.